So we'll do a quick, basically, market review of the setup from today. It was really the only day I was looking forward to since we have 8:30 news, which is unfortunate. Tomorrow we'll try and make it a stage as well. So not a stage, but a stream, and we can go over some things. But if we look at the 4-hour first, we'll go over Tuesday's price action. So Tuesday had this large displacement candle, breaking through a bullish order block, as well as some inefficiencies here. Typically, when you see this during the weekly chart, or on the 4-hour chart for the weekly, it normally means that we put in the higher low of the week. In this case, we'd had this weekly open. You can use the new week opening gap as the weekly open technically. So open, high, swept the previous monthly high, and then we displaced through inefficiencies and through this order block. So for me, I was looking at this as the high of week, and then a possible expansion into Thursday, into Friday to cap off the end of the range, possibly down to these inefficiencies here, right? Because we're looking for a premium bias of liquidity into a discount market. And we did reach a discount here. I would have liked if we dug a little bit further into this, maybe take out this sell side, which is what we were targeting yesterday on stream. That being said, 8:30 news, we got this retracement back into the larger inefficiency. Notice, since there wasn't any clean breaker in here, I guess maybe you could count this, but for the most part, there wasn't really any clean breaker since we're coming from a consolidation into a manipulation here. So this is the order block that would support the SIBI. So we're going to come back and touch this there, and that's going to be important to look at later on. So I'm going to mark this out actually right now. But we do have this 4-hour order block that's reached into, and if you go back to the hourly chart, we zoom in, what are basically the stages that we're looking for? You also need to see SMT, which I'll pull up as it prints really quickly. But we trade it down, and then right at basically London open, I'm going to move this to Thursday. We got this large expansion up. Okay, large expansion. And if you saw the schematics thing I posted on Twitter, or if you're in the private group and you saw it in the Q&A, the two sort of profiles, the daily profiles that I'm looking for is either the classic, there's a couple other ones, but classic London lower high of the day. I'll just show the bullish example for both of these. Actually, I'll do the bearish one. So open, we consolidate during Asian. London creates high of day. We displace New York OTE expansion into London close. So you can kind of time all of these sections, right? So preferably 2 to 5. Technically, I guess 2 to 3, but 2 to 5 in here. In here we have 7 to 10. And then in here we have our 10, technically 10 to 12, but more specifically for indices, I like if it's actually 10:30 to 12. So you can time that. That would be your classic London high of day. And then there's also this New York reversal, where we're building low resistance liquidity going into New York session, and then we displace all the way down. This would be 7 to 10 is when we start that reversal. So looking at today's profile, we got this expansion all the way up into this higher time frame IRL, which would be in premium, right? So we're starting already in a premium market. We are displacing as we get there, so that's the only reason I was looking at this, and it may have been a little bit more difficult to find a bias this morning, but trading back into premium, if you look at the 15-minute chart, this is where it's a little bit easier to see our profiles for the day. So do we have any meaningful manipulation below midnight opening price? No, I wouldn't say this is meaningful at all. All right, so we're expanding through the previous day high into premium, touching into there's a short-term breaker in here, but I'm not too concerned with that. But more importantly, the premium and then the 4-hour order block precisely hit there. And then as we get into the news, which is what we had today, 8:30 high impact news. Now you can see we're setting up nicely. We have low resistance sell side all in here, right? We have somewhat of an original consolidation we're starting from with this order block, first stage, second stage, and then we have our fib projection up here that we could be using. But this is kind of setting up for a New York reversal. And if you go back to lower time frames, let's go to the 5-minute really quickly. Right at the highs put in here at 9:05, so about 5 minutes off the normal window. But since we have 8:30 news, you can kind of shift that open, high, low, close window back an hour. So normally what we're looking for on a non-news day is 9:30 to 10, and then 10:30 to 11. On an 8:30 news day, there's 2 of these cycles. So 8:30 to 9, we can see one end of the range, and then 9:30 to 10 to create the other end of the range, and then this will also start a new one. So maybe this slight retracement up here is the open to high, and then we're going to complete it again, or we're going to have a rate reversal back up into the range. You can kind of study this as profiles as well, but this is what I'd be looking for, and then the continued 9:30 to 10 or 9:30 to 11 profile after that. So what do we have? Well, we have 8:30 news right here. And it's important to understand these time dynamics, especially if you're looking at the 1 minute chart, because it makes it almost impossible to look at the charts without understanding these kind of ranges that are put in. It's a lot easier to see it, I think, this way. So you get manipulation up here, caps the range off at 9:08, so slightly outside of the time window, 8 minutes. That's a little bit too far. And then at 9:30, we're already in a premium market. We've already kind of manipulated up into that 4-hour order block, up into the premium end of that 1-hour range, and into this 15-minute imbalance. So where is the liquidity at this point? Well, this up here, I want you to notice, this is high resistance, right? We already had this buy side liquidity pools and we already swept it. So anything above, and you can go back and study, I think it's core content month 1. But in month 1, he talks about this up here is high resistance. And then anything below the market structure shift to the sell side is low resistance. Make this a different color. So the market structure shift would be right around there, right around there. Above that would be high resistance. So you would expect basically a lot of retracements, potentially deep retracements that back into the range before we reach up into that buy side. So we're not going to preferably go for this swing high, especially since we've already framed the fact that the weekly high supposedly could have been put in after we saw that 4-hour displacement down on Tuesday. So 9:30 now has a function to complete. We've already manipulated. What is 9:30 going to do? Expand. So 8:30 manipulation into a 9:30 expansion. And then we have a very, very nice macro entry actually here, where you could be looking for premium of that short-term dealing range. So right in here, you can actually probably use this entire one if you wanted to. Yep. So right inside this entire dealing range, right from short-term high to sell side sweep, we have this dealing range, and we have an inefficiency formed inside of that dealing range. We also have, if you zoom into the 5-minute, the 5-minute change in the state of delivery would be here, technically. So that would have validated a potential shorting idea, especially if you framed SMT at the highs, and we'll look at that shortly. And then we don't really have any order block we touched in here. Besides, I don't know if we touched the breaker, but we had this inversion gap, I guess, we also filled back in. You can use that as a precise level. Obviously, I'm just pulling this from hindsight, but that would be the potential range. And then you also have quite a far way to go from this premium entry down to here. So that would have been a partial opportunity. You probably would have looked for 95 points. I think that's plenty. And then since we started off in premium IRL, what is going to be the target? Preferably sell side ERL, right? From IRL to ERL. And the closest sell side ERL would be London low, because that is a time-based liquidity pool, right? We don't have previous day low. That's all the way down here. Asian sessions here. London session is here. So that would be the target. So we're reaching for, just because we're, whoops, did not mean to do that. Just because we're reaching for a pool does not mean it has to trade all the way down inside that range for us to be profitable. It just needs to reach for it. So we have this macro entry here, 952, creating the 953, creating the high up into premium, and then trading down. You have more inefficiencies in here, right? Old selling, retouches that, shoots down into time of day. So 10:02, 10:10 creates the low of the day, which is that range that we're looking for, right? The 8:30 to 9 creates the high, 9:30 to 10 creates the low. Then we come back in, kind of consolidate in here back into the range. We have another market maker sell model into the sell side, but we do also have SMT that's present. So technically we did get our new timed low, but one thing you always have to be looking for is exit SMT. So did ES or NASDAQ sweep out one of the lows or highs? while it failed to at this specific time. So this would also be SMT, and then you can see the reason why we traded back up into, whoops, these smooth highs up here as a result during the 1050 macro. So we can look at the SMT at the highs really quickly to see if anything was present. Let me go to the hourly chart really quickly. So there's your SMT. Boom. Pretty easy, right? Pretty clear SMT going into 930. So that would have been, I think, you know, given the fact that the SMT was there right at 930, I think it would have been reasonable to use the 930 entry. So if someone had shorted at 907 or around right before 930, would have been reasonable since we had such large SMT. And this would be current week high, but obviously the Tuesday high, Monday high being manipulated and ES sweeping it, NASDAQ failing to. We're going to reach for further sell side. I was going to say something. Oh, notice as well. I mentioned this on, I think, the stream yesterday, or maybe it was the backtesting stream. But low of day and high of day need to be time-based, right? So there's important times that these things need to be put in, especially they're going to be disregarded sometimes during expansion days. So if we have a consolidation day and we expand after that, sometimes Asian session can be put in as the lower high of the day. So in this case, the Asian session could be put in as the low of day in this case, but high of day, notice we're waiting until a specific time. Or we have New York session there. I think we have also ES putting in their 930, not 930, 830 wick. Here we go. 930 wick. Another SMT there. SMT. And over here too. But I mean, if you were to trade YM, if we go back and look at the 1 minute on the YM, nasty PA. So normally this is why we don't look at YM for SMT or really any clear directional bias, because even on an 8:30 news day with Thursday, this is what you get. Really, this is the definition of high resistance liquidity runs. So if you want to go back in, this is like a textbook example of consolidation / high resistance. So low resistance liquidity looks like this. Okay, this is a perfect textbook example. So if you want to study high resistance versus low resistance, this is what it looks like. Low resistance, we expand, we form an order block range, and we'll touch the top end of the order block. Fill a fair value gap, beneficial as well, and then we expand. Same thing here. Top side of the order block is used, inefficiency, we expand. High resistance will touch the last order block. Like if it's a consecutive range, it's going to come all the way down, touch the last order block, or potentially sweep the short-term low. So in this case, this is low resistance. We're touching the high end, right? So if it was high resistance, what I would want to see is we touch all the way down to this one, or all the way down to this one, and potentially running out this stop here, and then this stop here, and then this stop here. And if you go back and study this side of the chart, what are we seeing here? Well, we have bearish order block, it's traded through, and then we come all the way back and touch this one. Then we have a bearish order block, it's traded through, and then we come all the way back. Instead of touching this end, right, and then shooting down, we're coming all the way back up into premium and touching the last one here. Then we're coming all the way back down. And then we have this order block range. We're coming back all the way and touching this one. And we're closing like within 1 point of this short-term high that we're trading through. Then we have somewhat low resistance back in here where we're actually using the inefficiency in the order block, trades down. Then we have a stop run up here, another stop run, and then it comes down. So this is like what you want to avoid. And this is the reason why we choose to not trade low probability days, because this is what you're getting either on a lower time frame or on a higher time frame. So say you were trying to shorten here, right, and you're using proper shorting stop management, you're going to get stopped out multiple times. And then what happens to your equity curve after that? You're going to face multiple times where if you say you're shorting from here, multiple times it gets close to your TP, boom, it runs up to your stop loss, but it doesn't touch it. Comes all the way down, doesn't touch it. Comes, and someone who's new will be like, oh, there's nothing wrong with that, right? Like if we're reaching for this sell side down here, and my entry was up here, say we'll use one of these tools. Say my entry was on this order block here, and I'm targeting this sell side, and this is my my stop loss was up at this high. Someone's gonna be like, oh, this is a win. But what you don't realize is on these days, what are all these retracements do to your psychology? as you're you're in a trade, right? Because you got to think of your equity curve just like the same way you treat your mental curve. So your equity curve should always be increasing. You have a mental curve as well. And it's as soon as you start looking at the charts, it constantly declines. Your mental curve does not go up anytime during the session. So at 9:30 when you get to the charts, or at 9:20, that kind of starts your clock. At least this is the way I think of it. So that starts the clock for me. So for me, it's around 90 minutes to 2 hours I can focus on the charts. And it's about 90 minutes where I can really stay focused on the charts until I either make irrational decisions, or it's just I lose focus and it's harder to read the charts for what they are. So this is a constantly declining mental curve. And every single time you enter position, what do you think happens? It kind of shoots down originally. So it'll shoot down in the amount of total mental capital you have, and then it'll kind of trend. And then every single time it comes, look over here, every single time it comes close to that stop loss, you're going to start freaking out. At least I would assume so. Like, not freaking out, but it's a higher tax on your mental than if it, gets close to your TP. So your equity curve is going to decline and decline. And then eventually past this line, this is where you make irrational decisions. This is where you over leverage, you overtrade, you close out a position that doesn't need to be closed out on. And then as a result, you trade after that. So you don't want to be in this zone. And there's different factors as well that can influence when you get to this zone, like external events, like, emotional stimuli. Maybe, I don't know, your dog died, or, some financial troubles you're having in your life. Those are examples where you could automatically lower that curve. Taking a win or a loss, both of them decrease that curve. Taking a win does not increase your mental capital. Taking a win decreases your mental capital, just like taking a loss does. Taking a loss may reduce it more, but even, taking a trade at all will drop that instantly. So this is why you want to avoid low probability days, and this is why the reason I don't stream these days, because I don't want to be burning my mental capital. I don't want you to train and learn to, study this kind of stuff when you have the complete decision to just avoid these days, right? If we could avoid these days, why would we not in the first place? There's no point in trying to watch this. Anyways, so a day like Wednesday, yesterday, I would say that's still low probability, right? So I didn't take any entries yesterday, but look at the range that we're given. It's, for the most part, we're just consolidating. We're back up into this, high resistance move. And we go back and we can study yesterday's PA post 10 o'clock. This is high resistance, at least for the most part. Like, this is not something that I want to be in, especially if I'm long or short. It's just stalling, taking a super long time, high resistance, all the way up into the 9:30 buy side. And then we fail to run it going to close of day. We don't even run the London high or anything. And then it takes till like London session to run all of that. Makes sense? So then we continued basically market maker sell model in here. And then we put in a new low, technically at 1105. But we had the SMT, and then we were traced back up into, for lunch macro, these smooth highs here. And notice the amount of times we're using these inversion fair value gaps. Failing to offer fair value means we're going to reach for buys at liquidity. So failed to offer fair value here, trading up through here, short-term high, taken, breaker in price, right? So low, high, lower low with the SMT. This is still technically a breaker. I guess you could count this as a mitigation block, but this in here, bullish order block with a fair value gap in here. Retraces down, expands back up. Oh, I forgot to measure. I wanted to measure the move, the fib projection. I don't think we got 2. Did we get 2? Got close to it. I normally do this on the 5 minute or on the 1 minute. We didn't reach it there. See, on the 1 minute, did we get lucky? Yeah, really, it's the same thing. So we missed it. It's all good. Anyways, let me look at the chat really quickly. Bearish unicorn. Yep. Love it. Have to get that 9:30 move down. Would have run 2 days. You don't have to. No one's saying that. Just because there's this opportunity doesn't mean you have to capture it, right? You could say the same thing about London, right? I could say, oh, I should wake up at 2 a.m. and trade London. It's not a healthy way to look at it, right? If you want to build a model around 930, that's one thing, but don't feel like you always have to capture each move. Right? 950 provided exactly what we were looking for. We're tracing into premium. After you can set it all up and 950 still works. You could set it all up and you could use the 1050 macro for this long. You have to just get your slice of the pie. That's it. So just because, you look over there and this guy has his slice of the pie, you don't compare. So something like this, for sure, it's a really, really nice move. But in hindsight, would you have been able to see this as a shorting opportunity from here and not trust that 930 wasn't going to manipulate one last time higher above this swing high? I wouldn't say so. For other people who have studied the 930, it probably would have been more clear. But what I'm trying to say is, yeah, it's nice to see these moves, but don't get caught up in trying to think that you have to capture it, because you don't. Right? You only need 50 points per week, 100 points per week. And if you get that piece of the pie, easy, right? That's one or two setups per week. And the last thing you want to think is, I have to trade every day. I have to trade every session. You don't. If you can capture one trade per week, that's a 2R, you're set for life, realistically, if you can repeat that. One or two trades, if you get two winning trades and they're both 2R, so you got 4R per week, you're killing it. So, this maybe been a textbook setup for the 950 macro. I think the best one was on, was it Tuesday? No, it wasn't Tuesday. I guess Thursday was the best one so far this week. See why the 5-minute SysD is part of your model makes everything very obvious and safe. Yeah, the 5-minute SysD, you have to be trading in the order flow of the 5-minute if you're trading intraday. The 5-minute is like, if you go back and you look at ICT core content, I think it's the market maker model series or the market maker series, whatever it's called. The lowest time frame that he has for intraday trading is the 5-minute. So many times he talks about that. He only introduced the 1-minute in 2023. Like, where he was constantly using the 1-minute chart was in the 2023 mentorship. So understanding the 5-minute order flow in relation to the 1-minute is super, super paramount to finding high quality trade setups. Because a lot of times if you're trading against that 5-minute order flow, it's not going to work out. Or it is going to work out, but it's going to take really long and it's going to be a high resistance until we break that 5-minute change in state delivery. So the two things I would look for is either the 5-minute order, actually three things. The 5-minute order flow needs to be in your favor of whatever price action you're looking for, or there needs to be some sort of a 5-minute SysD, and then at the bottom, a 5-minute inversion fair value gap. So if we get a SysD or the order flow is in your favor, if that's like optimally, that's a checklist off the board. Suboptimally would be a 5-minute inversion fair value gap, just because all the time it doesn't work. It needs to be really clear as to why that inversion fair value gap would be a change in the state of delivery. I would need to see something like, if this is present, I would need to see something like a clear 1-minute breaker. Just because I feel like if you saw that 1-minute breaker and then there was a 5-minute inversion gap, okay, that's probably enough where we can still frame a high quality setup. And this is obviously included in everything else we're looking for. Higher time frame bias, 15-minute SMT, whatever it may be. High probability day, news, time, price, etc. So, yep. If you're struggling with the 1-minute chart, either switch to the 5-minute, because the 5-minute is really easy on these high probability days, or have it like this, because or constantly cycled, whatever works for you. But like, having this 5-minute pulled up and just looking at, okay, where's the most recent order block? Boom, we got a short, or we got this candle that's shooting through that. It's hard for the 5-minute chart, especially since there's only about like 30 or so candles, 60 candles in the day. I could be wrong, but if the order flow is in that direction for the 5-minute, go back and you study what does the 5-minute do. For the most part during these sessions, it's one-sided. I'd rather trade in this order flow, right? It's for the most part, it's one-sided, and for trading in that direction, it's better off. So tomorrow should be good since we're still within the range. If I go back, there's plenty of liquidity for us to reach for. For the most part, we actually have some inefficiencies, so I think tomorrow should be fine. If we close through this order block, we're going to reach that buy side for sure. Monday's buy side. Definitely a weird weekly profile. Was this like a Wednesday reversal, consolidation reversal on Thursday? Could you explain your standard deviation projection? Yeah. So is he still in here? Oh, he is. Okay, perfect. So standard deviation projection is basically, think about it as a door hinge. So if we're reversing in price, our last manipulation leg, so if we're consolidating, then we manipulate into some sort of higher time frame PD array. So our key level, this last manipulation leg, you want to think about it as a door hinge. So we're going to swing it up. That's going to be the one standard deviation. That's like the minimum projection typically. And then there's going to be another one that's about 2 to 2.5. And there's a concept called swing grading, which basically means that there's each stage of this fib projection, there's certain price elements that'll happen in the stage of the market maker model. So you'll see the low risk buy in this section, you'll see the silver bullet in this section, you'll see the terminus in this section. So I don't use swing grading like that. I think it's, it's people like Ephesians and some other like Dexter's Lab, all on YouTube, use these kind of approaches where it's strictly market maker model mechanics. And I may start shifting over that way just because it looks really cool and their precision is unmatched in terms of higher time frame bias and things like that. But for the most part, the easiest way to look at it is if we have a manipulation leg and then we were to break through this, so it changes say delivery or a breaker, we're going to use that last leg. So from this high to low, we're going to target typically -2 to -2.5. That's most times the target. If we close through that, we're going to reach for -4. But most times when we're using this fib projection, you're going to look for that. And a lot of times we do reach the -2 to -2.5 within a New York session, because if you remember, every single New York session has a market maker model in it. So if you wanted to go back and measure this, and I think on a lot of the recaps that I post into the models and reviews chat, you can go back and you study basically all those times that it shows there's a lot of these fib projections that are used. You can also use it on higher time frame. I think I have it on the 4-hour chart right now currently. So in here you can see consolidation, last manipulation leg. I'm taking the -1. Sorry, the high to the low, projecting it down, and then that gives you the -2 to -2.5. You can see we're kind of trading back up into this inefficiency. So how we react to premium of this range is going to be important to me. It's not necessary you use it at all. It's like an advanced tool, like, because preferably you're not going to be targeting that. So the important thing, I guess, to know is if you are decide to use that, if you're going to use it, this -2 to 2.5 is not just something you target. It needs to line up with some sort of a PD array. So there needs to be some sort of a 15-minute PD array, preferably that lines up with it. So there's got to be bias of liquidity that's, over here, and then you put the fib projection that it lines up with it. That just further kind of emphasizes we're likely to reach up into here, especially if time of day is correct. So say, we're in a macro long, we got a nice fib projection. It lines up with this -2 to 2.5, lines up with 15-minute buy side, and it's before 10:30. So we're going to likely expand into time of day and this buy side. So think of it as like a crosshair where the algorithm is going to look for price as like a crosshair. So time and price, boom, we're going to hit that, then hit that, then hit that, then hit that. And it kind of, if it's too fast, it consolidates, or it has time distortion, which is just high resistance liquidity runs, or it's going to speed up, which is low resistance, really quickly. Think of news drivers, think of 930 volatility injections. It runs on time first, then price. So I think that's, for the most part, what I wanted to say for the recap. I don't think there's anything other than that. Tomorrow we'll definitely look at how London and PM session prints for today. I would assume we're kind of done for today. I still think that London low is going to be reached, but now we're within 50% of this dealing range, so I'm not too concerned with what we could do after that. And trading off the 1-minute SysD feels so risky. It's usually so early in the reverse. Exactly. Yeah, 1-minute SysDs are everywhere if you think about it. Like, we have 1-minute SysD here. You've got another one over here, and it's really hard to distinguish which ones are high probability. So if you're using the 1-minute SysD, pair it with some sort of a 5-minute order block or 5-minute SysD, because that's going to be the easiest one. Or like a 1-minute SysD out of a 15-minute fair value gap. That's going to be easier to spot, right? So anyways, I appreciate you guys joining this morning. I'll post this little market recap up on YouTube unlisted if you want to capture it. Go back and watch. I'll post a link into YouTube vids. So if you're in tier 2, I will see you guys tomorrow morning, Lord willing, if the Wi-Fi works this time, at 9:35 or so, and we'll look at the charts. Otherwise, take care. I will hopefully see you guys for the backtesting stream on Saturday. So journal, do the things that are necessary to succeed, and I'll talk to you guys soon. Peace.